General Motors, when you look at the earnings, they absolutely crushed it. I mean, they did what people would want to do, right? They got 306, they were looking for 272. Then you look at what they did from a sales standpoint, $47.9 billion. They were looking for $45.3 billion. That's a monstrous number. Then you look at the guidance. The guidance was raised up. Then you look over at the stock and you say, well, wait a minute now. The stock actually had a nice pop. The next thing you know, it starts to drop. Why is that? Well, there were other things that were positive as well. They talked about cash flows and everything else, but there were a lot of concerns about what's going on. And we talked about at the top, what's going on in China, right? And on top of that, not only the autonomous cars and that type of thing, but actually the money lost that has been going on right now over there because they're looking for growth, right? We're always looking for growth and expanding that growth. And if that's not actually happening right now, which it's not in China, that is an issue. So that's probably, I would say, at least a good answer for why that stock had that nice pop to the upside, kind of dropped down. And oh, by the way, year to date, up 38%. I'd say this stock has actually been performing very, very nicely so far. And it's not part of the 7. Oh, imagine that. It's not part of the 7, Justin. Can you believe it?
Yeah, I couldn't agree more. Sometimes people try to put these headlines on big moves. You see on CNBC right now, it's GM slows its EV plans, and that's why they're down. And I think you have it way more correct. When something rallies so much so fast, and stock market's looking forward to the future, and we're looking at, a big growth driver like China, and we're saying, okay, can we actually derive the same amount of growth out of this corner of the market that we thought we could? Oh, maybe not. Maybe that's some people's reason to sell. Personally, like you said, I think we're up plenty. And I don't think that this pullback is so bad for the health of the stock.
No, and it's not all that far off of the 52-week highs, which is over $50 a share. So it's right there. It's had a great run, and then there's just a little bit of worries about what's going on over in China because, of course, it's just like Starbucks putting their Starbucks over there or whatever. You're looking for that growth somewhere else, and they're just not getting it right now.